So, we are continuing with the impacts of activity-based costing. When we look at the impacts of activity-based costing, the benefits basically activity-based costing helps you plan your what do you call it as profits, pricing decisions, product mix decisions, etc. much better or more precise. As I had indicated, what is activity-based costing? Activity-based costing is allocating the joint cost or the overheads based on a specific activity and the activity driver. That is, you identify the activity driver that is causing that particular activity and allocate it based on the activity driver. In short, what did we say? The overhead is a pool as such. From the overhead, we divide that pool into various activities specified cost or activity based cost from that pool out. Once I have divided the activity based cost out there from that pool, I pick up each activity and then identify what is that activity driver out and then allocate it based on that out there. That is what we do in an activity based costing out there. Of course, it is not free from disadvantages. Because sometimes there could be activities, very what do you call it as, where it might become extremely difficult for you to identify the activity driver out. For example, let us say, to be very precise, let us say I run what is called as, I operate a welfare, a canteen or a welfare measures for my employees out. Now, when I operate a welfare measure, I can allocate it based on the number of employees using it. That is relatively easier. But if I have to allocate it based on the extent of usage by each employee, then that can get made very complicated in the process, and it could be, it could become very difficult. The cost of identifying the amount of usage by each employee, etc., and calculating it would be more costly than the cost of that particular activity. So what happens in those kind of issues we avoid, but normally we will stick to what is called as allocating various costs based on the activity and then identifying the activity driver and allocating it. Let us look at an example. Let us look at a comprehensive example in this particular case. Imagine I have taken an illustration out there. We are going to work on it. We are going to use an Excel sheet to work on it. We are going to continue this on the same Excel sheet out there. The total overheads assigned to a machine department is 17,03,000 out there. As you can see that it is about 17 lakhs out there, 17 lakhs and 3,000. That is the kind of total overhead, that is setup, receiving, etc. put together. Now, when we say overhead is a pool, so traditionally how were they doing it? They were basically taking this entire pool and allocating it on a specific arbitrary basis. So, for example, what they have done, they have allocated based on the labor usage basis. They have said that in this particular case out there, they have said that let's say my total labor usage is 225,000 out there, and my total overhead is 17 lakh 3,000 out there. Now I just divide 17 lakh 3,000 by 225,000, I get 725%, that is 757%. My overhead is 757% of my labor cost. So I will say my labor cost for product A is $10, then I will say overhead, total overhead is 757% of it, labor cost is $6.67 for B, 757% for it, etc. That is how I have allocated, and that's how arbitrarily they used to allocate early. Sir, how did we get 2,25,000? That is very simple. If I have to go back and then look at this entire data, you see that product A I manufacture 10,000 units. For product B, I manufacture 15,000 units. For product C, I manufacture 5,000 units out there. Now, I'll go back to the Excel sheet in this particular case out there. If I go to the Excel sheet, these are the number of units as you can see on the Excel sheet out there. Let me just increase the present. Now, if this is the number of units out there, now what is the cost of labor? The cost per labor cost out there, or what we say direct labor cost per unit out there. For A, it is about $10. For B, it is about $6.67. For C, it is about $5 out there. Oh, it's not coming? Okay, I'm sorry. it's about $10, 6.6. Oh, the new num lock is, yeah. For A, it is about $10. For B, it is about 6.67. For C, it is about $5. So, what is the total labor cost? Direct labor cost is nothing but $10 into number of units I manufacture, that is it, and exactly the same, that is what I do. So, my total labor cost, if I have to look at in this particular case, is 225,050 minus. So, based on that, what have I taken? That 0.50, if you actually see in this, it is okay. It depends on the number of decimal places you basically will have. It will be, if I say 6.666 out there, then it could be what do you call it as 2,57,000 and so on and so forth. So, as you see, it's a minor difference, that is because of what do you call it as the decimals out there. So, in general, I have taken in this particular case as what do you call it as in general I have taken what is called as 225,000 and then 1703. So, I have taken 757%. So, when my total overhead pool is 757% of my labor cost, I am just allocating per unit. This is how I allocate, and I say my unit A, per unit A cost me about $105, unit B cost me about $87, and unit C cost me about $52 out there. So, this is the price at which I am, this is the cost for me to manufacture these units out. Now, based on this, I can decide on the selling price out here, and I will say my target selling price in this particular case out there. My target selling price for each of these, this is the standard cost what I have basically arrived at out here. This is the standard cost, that is the first row, it tells you what is the standard cost, $105, 85. So, what we see based on that, the standard cost is about $105.70 out there. The cost for B is about $87. The cost for C is about $52 out there. Whereas, what is my target selling price? My target selling price based on that is my $162 for A. So, $134 for B and $81 for C, and I'll make about 35% profit out there if I do that, because my target is to make 35% profit. This particular company has a target of 35% profit out there. Now, I see the actual selling price. Actual selling price, A, I am able to sell it at 162, very difficult, I am able to manage it. B, I am just not able to sell it at 134, I am selling it at a discount at 125, and C, I am selling it at 105, I am selling it more than the target price. So, what happens? My profit percentage is C, I am making 50% profit, B, I am making only 31% profit, C, I am making 35% profit. My target profit is 35%. Now, what happens? You make a decision. Why? Because the product B is not giving me the desired profit. Let me drop product B. Let me divert that facility towards manufacturing more number of product C. I can take a decision like that if there is a possibility. Now, if you take a decision like that, you would basically could possibly end up in a disaster. Why end up in a disaster? Because we don't know which is the product, whether A or B or C is consuming more of these overheads. Because here we have allocated the overheads to all the three products at 757% of the labor cost, that's all. So, what happens if more overheads are being consumed by product C, not by product B or product A, then what happens? If you see here, your product A is having more amount of charges of overhead per unit, whereas product C has a less charges per unit overhead charges per unit out there. If you actually, in reality, if C is consuming more overheads out there and than A, so what am I doing? I am overcharging A and undercharging C out there. So, if I close down the product B and then manufacture more and more of product C, then what happens? You could possibly end up in a disaster. Let us see this as we go along out here. So, let us see this. Now, that is the kind of decision you want to make. You want to drop product B and move on to product C. Now, Now what happens? This is basically gives you all the details out there, and that details are basically also captured in my Excel sheet out here, as you will see out here in my Excel sheet. That is the number of units manufactured I have given you. The number of production runs out there is also I have given you. Even for product A, there is only one production run. In one production run, you manufacture all 10,000 units, whereas for product C, you need 10 production runs to manufacture this 5,000 units. Number of shipments, shipments, that is, it has to get out of your factory also. For A, I send everything in one shipment. For C, I am sending everything in about 20 shipments out there. Number of components required for manufacturing 1 unit of A is 5. Number of components for 1 unit of B is 6. Number of components of 1 unit of C is 10 out there. That is the number of components that I require for manufacturing each unit of the product A, B and C. I can even move further to say that cost per component in dollars out. The cost per component also, if you look at in this particular case, I will say that it's about $4 for B, A, and $5 for B, and it's only about $1 for C out there. Is it $1? Yeah, it's $1. It's $1 for C out there. Now I have the run labor in hours. The labor, that is the run labor out there. That is, for every unit that I manufacture for product A out there, the run labor in hours out there, I am looking at half an hour is the run labor per unit out there. Am I run labor? The labor cost per se is about half an hour per part out there for product labor cost. Run labor is half an hour per part for product A, 1/3 hour for product B, and 1/4 hour for product C out. Each unit. Machine hours is I need about 1/4 for manufacturing of product A, 1/3 for product B, and half for product C. And I need to set up the machine, and because I know the number of setups I basically will sort of look at out here in this particular case, I need about 10 setups. What number of runs out here? Number of runs is about this. So every time there is a production run, I need to set the machine, and I need about 10 hours of what you call it as setup labor for product A, 10 hours for B, and 11 hours for every setup for product C. No, that's exactly what is described in this particular slide out there. They've got, what is all this? Sir, they've just got the aggregate of all. On the right side, that where my cursor is moving, they've got all the aggregates. That is, what is the aggregate? They've said 10 hours, there's one run, so 10 hours. 5 runs in product B, so 50 hours for product B, so 50 plus 10 is 60. 11 hours for product C, how many runs? 10 runs, so 110 hours. Now let us say you set up labor. You need 10 hours per run. How many runs I have? I have only 1 run in product A, so 10 hours. How many runs I have in product B? 3 runs, so 30 hours out there, 10 hours per run. How many runs I have in product C? 10 runs, 11 hours per run, so 110. 110 plus 30 plus 10, 150, and that is the number of hours. That is what you see out here in this case. Same thing, run labor per part out there. Let us sort of look at. Let me get this also written on my Excel sheet out here in this particular case. Let me also get this written in my what do you call it as Excel sheet out here, so that it's easier for you to discuss as we go along out here. Now they say setup labor cost out there. Setup labor, total setup labor hours. Total setup labor hours, it is 10 hours per run. How many runs I have? I have 1 run out here, and that is what I need out here. Whereas for product B, I need 10 hours, but how many production runs I have? I have 3 production runs and 30 hours. And whereas for product C, I need about 11 hours, and then how many production runs I have? I have about 10 production runs, and that is what I basically see in this particular case also, and I see this as 150 hours out. Now next what you see out here is run labor and machine usage. Let us sort of do the run labor and machine usage. Let us say run labor. Per part I need about, that is total run labor. total non-labor hours consumed out. Now, for every part, how many parts I am manufacturing units? I am manufacturing 10,000 units. For every part, I need about half an hour of run labor. That means I need totally about 5,000 hours of what do you call it as run labor out here, and that is what basically I am looking at in this particular case out. That is exactly what I am looking at in this particular case. Now let us look at product B. I say I manufacture 15,000 parts, and for every part I need 1/3 of an hour. So I need about 5,000 hours. For product B, I manufacture only 5,000 parts and I need 1/4 of an hour. So I need about 1,250 hours. So what I am doing, my total labor requirement is about 11,250, and that's exactly what we saw out here. Let us look at the machine usage also. Let us look at the total number of machine usage hours. Consumed out there. I manufacture 10,000 parts. I need 1/4 of an hour per part, so I need about 2,500 hours. As for B, I manufacture 15,000 parts, I need 1/3 of an hour out here. And for C, I am manufacturing 5,000 parts, I need about half an hour per part out there. So I am basically requiring, what do you call it as, I require about 10,000 machine hours, and that's exactly what you saw out here in this particular case. So we got all the data. Now, what is it that you are looking at in this particular case? We are looking at, what do you call it as, the appropriate cost out. Now, this is what we saw earlier. This is how it was getting traditionally allocated in the past out. Now, somebody has come in and then they said that we will improvise this allocation. We will improvise the allocation out there. We will improvise the allocation. Now, they have said that, let us to improvise the allocation, they have said that it's a refined approach. They have said that let us take all these costs out there, and now this particular pool, what is here, the amount of pools, that is 1, 2, 3, 4, 5 out of the 5 overheads, I will allocate receiving cost based on the material consumption. I will allocate, what do you call it as, the machine hours based on the machine consumption, whatever. And I will allocate setup. So what they've done out here in this particular case, they've said that they've taken the material overhead, that is the receiving cost out there. I have allocated it on the basis of the material cost out here. They have taken the setup labor, allocated it on the number of hours consumed for setup. And all other overheads, all the other 3 overheads out there, they have allocated it based on what is called as machine hour basis, the number of hours the machine consumes out there. Let's try and see if we can do that also in an Excel out here. Let's take it from there. Now, what does it say? It says that, let me get this out here. Let's say that their product A, B and C, direct materials. Direct materials, if I look at, it's about roughly about $20 for A, and then $30 for B, and then about $10 for C out. Now, what have they done? They have said that what is the total material consumption? Total material consumption is cost, total material consumption in terms of basically total material consumption or total material cost, I would say, total material cost out. What have they done? They have said that $20 per unit, I am manufacturing 10,000 units out there, so it will be 200,000 out here, and so on and so forth. It is $30 per unit, and then I will say I am manufacturing basically 15,000 units out there, and in this particular case, it is $10 per unit, and I am manufacturing 5,000 units out there. So they say that a total material cost is basically, in this particular case, 700,000. So they said that my receiving cost is basically what is the total receiving cost in this particular case. We basically saw in this overheads out there. My total receiving overhead is about my total receiving overhead is about 3,000 out here. So what have I done? I will say I am going to divide 3 by 7 is what I am going to do. It's per unit out there. As it is, if I say in this particular slide out here, what have they done? What have they done out here? They have said that 3,000 divided by 700,000. That is, I will say 43% of the cost of material will be the overheads. On that basis, I am basically going to allocate. That is what they have taken out there. They feel that it's an improvised method. It's a better method out there. So what they said that if I am going to look at in this particular case itself, that is what have they done? 300,000 divided by 700,000 to be expressed in the form of a percentage out there. So that will be about 43% out there. They have said that my receiving cost, I will say per unit in this particular case, my receiving cost per unit out there will basically be, what do you call it? This into 43% out there will be the receiving cost out here, and that is exactly what they have taken. So all the what do you call it as 300,000 they would have allocated. Then they have said the direct labor and other things out there, and all other cost out there they have allocated. Let us look at the other thing what they have done. They have said setup cost out. Setup cost, they have allocated it on the basis of the number of hours. In fact, if you look at out here, we say that setup labor hours is about $10, $11, and $10 and $11 out there. What is the labor cost per hour out there? If you see this, the simple labor cost per hour, that is my run labor is half an hour out here and my labor cost is $10 out there. That means per hour it is $20, and that is what your problem also indicates in this particular case. My, what do you call it, as my labor cost is about roughly about $20 out there, and that is exactly what we also see in this column out there. Labor is $20 per hour. You can also calculate. You can also otherwise look at calculation out here. We will say my labor, run labor, setup labor cost. We are just keeping labor cost. There is no difference between run labor and setup labor. There is no data on that. So when a labor is half an hour per part out there and the cost of labor is $10. That means per hour my labor cost is $20 out there. So what is the total setup cost for each of these? What is the total setup cost for each of these? That is, I require total setup hours. I require only 10 hours out there. Cost is $20 per hour. I require in this particular case 30 hours out there. My cost is about $20 per hour. I require about roughly 110 hours out here, and my cost is $20 per hour. My total labor cost, setup labor cost in this particular case is about $3,000, and that's exactly what you see in this pool out there. My setup labor cost is $3,000. Right, that is what. So what have they done? They have said that why not we divide it by the number of units. So setup labor cost per unit, they'll say $200 is the setup labor. Total number of units you are manufacturing is 10,000 units out there. So per unit it's going to be 0.02. In this case it's 600. Per unit it's going to be about 15,000 out here, and it's going to be 15,000 out here, and I don't know, 600 divided by, what do you call it, as per unit, it's going to be 15,000 out here. So what I do, it's 600 out there, and per unit it's going to be about 15,000 out here, and that's what I get. Whereas it's 2,200 out here, and per unit it's going to be 5,000 out here, and that's what I'm basically going to get. So per unit labor cost I basically got, and that is exactly what you see in the figure out here in this particular case out there. So what did we do? We got per unit this one, material receiving cost, per unit what is called as setup labor, and that is, let me go back to my Excel. You can actually see that we got both out here. This is what we have got. Now what have they done beyond this? They have said the rest of the overheads, I have pulled it together and allocated it based on the machine hour basis out. Rest of the machine hour basis. Machine hour basis, what happens? If you look at my rest of the overheads, all three put together is about 14 lakhs out there. And then I divide it by the number of machine hours out here. The number of machine hours totally consumed is about 10,000 out here in this particular case, and number divided by the number of 10,000 hours out there. So what happens? I am allocating it on the basis of what you call it as the machine hours out here. So I will say it is for every machine hour, it's $140 out there, $140 per hour out there. So let us look at each of these, $140 per hour. So let's go back and calculate it with the help of Excel out. They have said, what is the machine hours, total machine hours? Total machine hours consumed, we have basically calculated out here. Now, we see this in this particular case, the allocation based on machine hours is roughly about, what do you call, is roughly about, this is my 14 lakhs is my total overheads out there, and machine hours is about 10,000 in this particular case. So it's about $140 per hour out. Now if that is the case, I am going to do, I will say it's about, if total number of machine usage consumed is 2,500 into 140 out there, and total number of machine usage consumed in this particular case is 5,000 into 140 out there, and then total number of machine consumed in this particular case 2,500 hours out there into 140 out there, and that is basically what I have got. And let me total this out here, and that's what, and this is basically what I am basically, if I basically total it out here, and that's what I am basically getting out here in this particular case out there. So that is exactly the 14 hours out there. I will just introduce out here. Now if allocation is based on machine hours, the machine the rate would be in this particular case, I will sort of look at in this case, let us sort of merge it, and I keep it to say, its allocation would be what is called as, we saw that 14 lakhs divided by number of hours out there, that is all, it's about 140 per hour, that is all what it is. That is exactly what we have got here. So what happens? Per unit it will be, per unit overhead cost will be, per unit total overhead cost will be what is called as this divided by the number of units out here, and that is all what we have got out there. And I am just going to pull this out here in this particular case, and let me reduce the decimals out here, and that is what we have got out here in this particular case. So what have they done? You have got this. So when you do it this way, what happens? Your cost figure changes. Your cost becomes $73 out there. Earlier, what was the cost you had? The cost what you had was $105 out there for A. Now you have what is called as $73 for A. Now for B, it is $96. Earlier you had about $87 for B. The cost of B has basically increased. The cost of C has also increased to $89. Earlier you had about $52 out there. The cost basically has increased out. So if then what happens out here in this particular case? Now the question that comes in here is this cost right, or is the earlier cost right out, or is this cost right out there? That is what we are trying to question out there. Or is there any other newer method for allocation? That is what we have to look at.